Hey everyone, welcome back to Corporate Decoder. Today, JANX Therapeutics Incorporated JNX just filed their latest 8K, and I am seeing a clear signal about shareholder engagement. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company just held its annual meeting of stockholders, and while the results are largely positive, there are a few details that tell a deeper story about how investors are feeling about the direction of JANX Therapeutics. So what happened here is that on the 11th of June 2026, JANX Therapeutics Incorporated held its yearly meeting for its shareholders. This means that a good chunk of the company's stock, almost 54 million shares, was accounted for at the meeting, either by people attending virtually or by sending in their voting instructions. That is a pretty solid turnout, suggesting that shareholders are paying attention. The first big item up for a vote was the election of 2 directors. These are the people who help guide the company's strategy and make big decisions. The good news is that both candidates, Natasha Hernday and Dobmeier, were elected. They will serve until the company's 2029 annual meeting. Looking at the votes for Natasha Hernday, she received 42,850,103 votes in favour and 4,519,796 votes withheld. That is a strong majority in favour, but the number of withheld votes is worth noting. It is not an overwhelming landslide, which sometimes happens when there is complete confidence. Then there is Dobmeier. He got a much higher number of votes for 46279387 with only 10900512 votes withheld. This indicates a higher level of support for him compared to Natasha Hernday. It's interesting to see this difference in support among the directors. And in both cases, there were over 6 million broken non-votes. These are shares held by brokers where they didn't receive voting instructions from the beneficial owner. It's a pretty significant number, and it just reinforces how many shares are out there that might not be directly voted by their ultimate owners. Next up was a vote to ratify the selection of their independent auditor, Ernst and Young LLP. Think of these as the accountants who check the company's financial statements to make sure everything is on the up and up for the fiscal year ending the 31st of December 2026. This proposal sailed through with almost unanimous support. 53,560,969 votes were cast in favour, with a mere 113,446 votes against and 70,507 abstentions. This is extremely common and indicates that shareholders trust the board's choice for their financial watchdog. It is standard procedure and usually not a point of contention. Now, this is where things get a bit more nuanced. The third proposal was an advisory vote on executive compensation. This is where shareholders get to voice their opinion in a non-binding way on how much the top executives are paid. Here we see 42,749,182 votes in favour of the executive pay as disclosed. That sounds good, but then there were 4,574,376 votes against it. That is a considerable number of shareholders saying they are not entirely happy with the compensation packages. There were also 46,341 abstentions and over 6 million broken non-votes, similar to the director elections. What this tells me is that while the majority of votes were in favour, there is a noticeable segment of shareholders who feel the executive compensation might be too high or not adequately tied to performance. In the world of corporate governance, this is a signal the board and management should pay attention to. It is not a rejection, but it is definitely a point of concern for a notable portion of the investor base. It reminds me a bit of how some companies in the past, when faced with shareholder pushback on pay, have had to adjust their compensation structures to better align with investor expectations. A similar pattern can emerge if this sentiment continues. And finally, the report is signed off on the 12th of June 2026 by David Campbell, PhD, the President and Chief Executive Officer. This is just the formal closing of the report. Looking at the broader picture, JANX Therapeutics Incorporated has successfully navigated its annual meeting, with key leadership positions solidified and auditor approval secured. However, the advisory vote on executive compensation reveals a division among shareholders, with a significant minority expressing dissent. This is a common theme for growth-oriented companies in the biotech sector, where aligning executive pay with often volatile stock performance and clinical trial success can be challenging. The company's market cap is around $838 million, and it operates in the biotechnology space. The key takeaway here is that while the votes on directors and the auditor were strong, the compensation vote provides a clear signal that a portion of JANX Therapeutics Incorporated shareholders are watching executive pay very closely. It will be interesting to see if the company addresses this feedback in upcoming communications or compensation decisions. What I will be looking for next is how the company responds to this shareholder sentiment regarding executive compensation in their future proxy statements and investor relations. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please hit that like button, subscribe, and join our Discord community linked below.